This is Steve Hayes in London for the EPRA annual conference. I have with me David Atkins, who's the CEO of Hammerson's and also the new chairman of EPRA. David, welcome.
Good morning, Steve.
How do you see the situation in the European real estate market over the next 12 months? What are the main factors and trends you see facing us?
Well, I think it's interesting. Up until a couple of months ago, my view would have been one of continued recovery from clearly a period of financial difficulty in 08 and 09. I think the last couple of months have just reminded us that the banking crisis of then still exists, and particularly at the sovereign level, there are major issues, not only in the UK, but in Central Europe as well, continental Europe. I think that brings into sharp focus the reality that the availability of debt will continue to be restricted, certainly on a secured basis. So I think that the markets will see a period of perhaps stability, rather than before I was proposing and forecasting some further recovery. But inevitably, the capital that is available in Europe will be focused more on quality assets. So I think you could see a further divergence of prime and secondary real estate, and values continue to spread between those two areas. So I'm fairly positive about prime, more sanguine about secondary real estate.
Okay, now Hammerson is a UK and French retail specialist. Drilling down a little, how do you see those markets for you over the next 12 months?
Yeah, in many ways my views about prime secondary is very clearly driven into the retail as well. It's very easy to be sanguine and negative about retail, certainly in the UK, for reasons of increased taxation, increased commodity pricing, and petrol in particular, has put a constraint and squeeze on household budgets. It's less of an issue in continental Europe, principally because household budgets are less driven by debt, and that's really a factor of the last 10 years in the UK. However, there's no doubt that there is money that people have to spend, but it's fairly selective. But where that money is going is to the bigger, more dominant shopping centres. People increasingly want the full range of retail offer. They want a day-out experience, catering, leisure, good car parking, and it's the prime, larger retail formats that can offer that. So I think in those larger, dominant shopping centres, we'll continue to see them take market share. But again, secondary retail, I think, will suffer.
Now, you've just been appointed chairman of EPRA. Congratulations.
Thank you.
What do you hope to achieve with EPRA over the next 12 months, and how do you see the association's priorities?
Well, I'm following on from Guillaume Poitrenal, who's done, I think, a fantastic job over the last couple of years. So I really want to take that momentum and keep it moving forwards. I think EPRA has a major role to play, not only in Europe, but interestingly globally. And I think the way that we link with other real estate organisations across the globe is very key, because there's no doubt that real estate has to do is bring itself up beyond where it is in terms of getting a voice beyond where it sits today in the securities listed markets around the world. Real estate has a great following, but with those that know it, the specialist retail and property funds who understand real estate are great followers. But more and more, the generalist investors are discounting real estate as of less significance, and we've got to reverse that trend. Importantly as well, we need to reach out to those newer emerging capital flows and ensure that we take our share of the pie and get capital into this sector. And that is an area I will continue to focus on over the next 12 months.
So it's investor outreach, and
I think so, yeah.
So how do you intend to actually do that? I mean,
well, I think it's working with the EPRA team. It's working. I think the great value of EPRA is that it engages with the top CEOs and finance directors in Europe. I think it's motivating and mobilising that resource and ensuring that we work together and aggregate the power of the individual companies. You know, we are all relatively large companies, but on a global platform, we're not so large. And when you look at what we can achieve individually, there's a huge amount of duplication. So I think it's about speaking with one voice through EPRA, coming together, aggregating our teams, our investor teams, and getting that message across in a very powerful way, and that I think will achieve better results than perhaps we can do individually.
David, thank you very much.
Thank you.
For this and other industry interviews, please go to EPRA.com and REIT.com.